Collapse of Bitcoin by Mark Yusko. Mark Yusko, a renowned hedge fund manager, gave his take on whether the FTX collapse will speed up or slow down the crypto bear market. In a recent interview, Yusko focused on two keystones of the crypto industry, GBTC and Tether. The tragic fall of one of the largest cryptocurrency exchanges sent shockwaves across the crypto industry. The FTX collapse directly affected crypto users, investors, and related companies, especially after its contagion effect became severe. Crypto exchanges are now under fire to provide more accountability and transparency as they try to maintain investor trust. Apart from that, the demise took a severe toll on investors' confidence. Meanwhile, the growing negative sentiment also put a dent in the industry. Retail confidence has encountered a significant setback, and many customers across all centralized exchanges have begun to move their funds to cold storage. These are just a few reasons why the bear market could prevail longer than expected. Renowned analysts and executives in the space have aired their narratives amid the chaos. Sending shockwaves, Mark Yusko, the CEO and CIO of Morgan Creek Capital Management, appeared on the Altcoin Daily podcast. Here, the partner and founder of the asset management firm shed light on two events that he believes could seriously jeopardize crypto. Triggered by the FTX collapse, the bear market could continue and stay longer than expected. Referencing FTX as the big old storm, Yusko put Sam Bankman-Fried, SBF, as the bad guy at the center of this storm. Bad people do bad things and hate the players, not the game, Yusko said. The FTX incident, with the added pressure of Genesis Capital, similar to Bitcoin trust manager Grayscale, has the potential to seriously harm the market. Firstly, Yusko raised concerns about the potential liquidation of the Grayscale Bitcoin Trust, GBTC. The Grayscale Bitcoin Trust is the largest Bitcoin fund that allows investors to gain Bitcoin exposure without actually buying BTC. Following the collapse of FTX, DCG, Grayscale's parent firm, CEO Barry Silbert revealed that it's been stuck with $2 billion in debt, per a CNBC report. At press time, the Bitcoin tracking investment vehicle was trading at a discount of 42.37%, according to data from MyCharts. Premiums recently fell to a record discount around the time that rumors about insolvency at FTX began to leak out. Concerns over Tether. Yusko then moved on to this second concern, which is the top stablecoin by market cap, Tether, USDT, and its relation with FTX. Bein Crypto reported in May about Tether's undisclosed percentage of its assets in a boutique Bahamian bank. Bitcoin bull Mark Yusko sees trouble at $60,000, calls the cryptocurrency overbought. Right now, a Bitcoin bull is on pullback watch. Hedge fund manager Mark Yusko believes investors will take profits due to the cryptocurrency's sharp rally over the last few weeks. There are a lot of people that think we could get $100,000 by the end of the year. The stock-to-flow model says we should, the Morgan Creek Capital Management CEO and CIO told CNBC's Trading Nation on Friday. I also would be surprised of a little consolidation. Look, we're up 40% this month, which is only 15 days old. Bitcoin crossed the $60,000 mark for the first time since April on Friday. The bullish move came on excitement surrounding progress on Bitcoin ETFs. We're excited, obviously, that people are recognizing that approval is likely imminent, said Yusko, who's also managing partner of Morgan Creek Digital. We've been bullish on cryptocurrency, and Bitcoin in particular, for a long time. Yet he's questioning the latest performance's sustainability. A pause that refreshes given how overbought we are right now wouldn't surprise me, said Yusko. There is some risk of the buy the rumor, sell the news. Bitcoin $250,000. Any profit taking would be temporary, according to Yusko. His call is for Bitcoin to hit $250,000 in 5 years. It's classic supply and demand. One of the nice things about Bitcoin as an asset is it has a finite supply, he said. We know every day for the next 140 years how many Bitcoin will be minted through the mining process. In 5 years, Yusko estimates Bitcoin's value by market cap will equal gold. I believe Bitcoin has and is replacing gold. It's now digital gold, noted Yusko. It's a perfect store value. Part of his reasoning surrounds a long-term deflation prediction. It's a scenario that's rarely being talked about as the world copes with inflation spikes and a supply chain crisis. Yusko contends upward prices pressures are a knee-jerk reaction to the massive global COVID-19 economic lockdowns. The likelihood of us getting a full-on inflationary period, I think, is really low, he said. Normal is that we are in a deflationary debt spiral. It's been going on for a couple decades. He cites an aging population and the impact of massive virus aid measures as major catalysts. We have bad demographics. Too many people reaching retirement age. We have too much debt, Yusko said. That all leads to deflation. The anticipation of the next Bitcoin halving will spark a crypto rally in 2023 regardless of the grim macroeconomic picture, according to hedge fund manager Mark Yusko. Halving will be the main catalyst that sparks a new crypto rally as soon as the second quarter of 2023, according to hedge fund manager Mark Yusko. The halving mechanism, which reduces Bitcoin's block rewards by half every 4 years, has historically been a major catalyst for crypto rallies. The next halving is expected to occur in early 2024. Usually the market will anticipate that by about 9 months, Yusko said in a recent interview with Cointelegraph. According to the hedge fund manager, the halving will propel Bitcoin to $100,000 and potentially beyond by the laws of math. If the block rewards get cut in half to 3.125 from 6.25, then the price has got to double-ish in order for the miners to continue to make money, he stated. Yusko thinks the rally is going to take place despite an unfavorable macroeconomic picture dominated by high interest rates and slow growth. That is because, according to Yusko, digital assets will ultimately prove to be uncorrelated with equity markets. Traditional assets are driven by economic growth, Fed policies, inflation. Crypto is driven by the technology itself, millennial adoption, explained Yusko. Bitcoin crash. What was behind the crypto collapse? Cryptocurrency like Bitcoin is volatile with a track record of boom and bust cycles that have left many wondering whether it's safe to invest. The price of Bitcoin, the most popular cryptocurrency, dropped below $16,000 in November 2022, a year after it reached a record high of $69,000. Things have started looking up in 2023, and it's currently worth around $30,000. But the digital currency was on a downward trajectory throughout 2022. What is happening to the value of Bitcoin and why? Bitcoin is incredibly volatile. It is prone to rising and falling sharply on a daily basis. But it's not the only cryptocurrency to have had a tumultuous time recently. Global stocks have gone into a downturn as a result of the war in Ukraine. Inflationary fears higher interest rates, which will make it more expensive for businesses to borrow money. This has spilled over into the cryptocurrency market. The slump in November 2022 was triggered by the collapse of FTX, which handled around $1 billion transactions each day. Its collapse is having a knock-on effect on other crypto exchanges. In June 2022, Bitcoin dropped below $20,000 for the first time since 2020. This was prompted by the decision of Celsius Network, a major U.S. cryptocurrency lending company, to freeze withdrawals and transfers, citing extreme conditions. The move fueled a slump across the cryptocurrency market. China's continued crackdown on crypto is playing a part too. In addition to this, there have been sudden and severe sell-offs of major cryptocurrencies. This has triggered panic and further sell-offs, which has knocked consumer confidence. But Bitcoin has recovered some of the ground it lost last year and is now worth around $30,000. Why is Bitcoin so volatile? Unlike traditional investments, such as company shares, where price movements may well be influenced by the performance of the business, Bitcoin has no underlying asset. This means that the movements in its price are based purely on speculation among investors about whether it will rise or fall in future. As a result, there can be violent swings in the price of Bitcoin, even in the space of 24 hours. At the moment, high inflation and a cost of living crisis are causing people to reduce their investment risk. This has led to people selling their cryptocurrency. There have also been a number of incidents that have caused the price to fluctuate. Has Bitcoin's bubble burst? In 2021, the price soared by more than 700% in 12 months to a record high of $69,000 in November. It certainly seemed like Bitcoin's bubble has burst as investors have lost confidence in the crypto sector. It is uncertainty over the future of Bitcoin, which caused prices to crash in 2022. In June 2022, it plummeted below $18,000. It was still below $20,000 by November 2022, just a year after its record high of $69,000. While it's now showing signs of recovery, it's still a long way off from its record highs. When assets rise very quickly in price and surge to a record high, typically this makes a crash much more likely, or at least a correction, which is when the price falls back down to a more normal level. This appears to be the situation that Bitcoin is in right now. It took the cryptocurrency 11 years from launch to get to $20,000 per coin, but only 3 weeks for Bitcoin's price to double from there. A decisive year for crypto investors was 2013. Bitcoin's price went from $13.40 at the start of the year to its hike in December of $1,156.10, before falling to about $760 3 days later. Where it is heading next is equally unpredictable. Check out One Times Money Mentor Reader's crypto experience. Bitcoin's roller coaster ride has swept me to an 8,500 pounds profit in less than a year. Transactions are more confidential. It is a safe store of value because it can't be printed or seized. Bitcoin has been touted as an alternative to gold, meaning it could prove itself as a hedge against inflation.